Welcome back to the Eric Krown Crypto channel. Wishing you a happy New start to like Sunday from a different location. It's different location time, baby. We're back in Helsinki, Finland, and there is plenty to discuss on the higher term timeframes. Namely this. Bitcoin went to 12,000. It already happened, actually. In fact, I'm not even sure that the bears realized it. So that is going to be the focus of today. Very, very high term time frame analysis as it is Macro Sunday, and also quarterly coming up in just a few days here, which is going to massively influence the long term of this asset, the next 3 to 6 months, maybe even more than that. And then I will speak about no lower term time frames actually today. Tomorrow we'll go over such things. Anyways, without wasting any more time, I do want to get into the actual first chart of the day, and it is this. Bitcoin down to 12,000 bucks. Supply was tapped, and supply was tapped again. And you know what? I think very few people are actually even aware that this chart exists. What essentially is this chart? It's Bitcoin versus the money supply. So it essentially kind of equates for the contraction and expansion that we do see in the overall money supply, which, can be deceiving when you're not taking these things into consideration over the very, very long period of time. Why is that? Because obviously, the government printed a shit ton of money, since 2020, has been taken a little bit away in the most recent year, but that obviously is going to change the value of the dollar. So when we're looking at the very, very long term, it's important to understand that if the US dollar is inflating, or if the value of it is changing actively, then the price relative to Bitcoin is going to be discombobulated from that. It's not going to be truly representative of it. Of course, in the lower term timeframes, you don't really notice these things, but in the very, very high term timeframes, like the monthly and above, well, it certainly does pose a pretty interesting question right here, because you can see in a more serious tone that on the November Dumbola party, Bitcoin got down to basically the October breakout of 2020, which Bitcoin was around like 11, 12, 13,000 bucks at that point. Traded from like 10,000 to 30,000, it looks like. So do understand that, if you're looking for those prices to get hit, and you're taking into consideration and kind of standardizing for, this was kind of already hit, and so far so good. Now, if we can go into the actual Bitcoin chart, so not looking at money supply, but just looking at straight up Bitcoin, we can see on the quarterly chart, which again is closing in 5 trading days, so pretty damn soon here. I think that takes us into the end of the week. Yeah, Friday is gonna be the last day of the trading week, so this next 5-day period is gonna be pretty fucking big, as the quarterly does close, which you only get 4 of them a year. Well, what is at stake? Well, on the quarterly, we can see that hidden bullish divergence is going to have a chance to populate itself for the second time in history. The first time was actually coming off of the 2018 lows right here, where Bitcoin did put in a low somewhere around about 3,000 bucks before working its way onwards and upwards over the following years. Again, were lows retested over here? Yes, indeed. But ultimately, no closures below, and onwards and upwards was the name of the game for the next 2.5 years or so. Anyways, back on with this, we can also see that quarterly volatility represented by the BBWP indicator is at relative extreme lows right here. We really don't see it like get too low for too long, but you can see that it was at comparable positions to what we did see before the biblical 2016 rally, as that one started, where Bitcoin was moving from like, under 1,000 all the way to 20,000 bucks. And then more recently, we can see the expansion happen from similar levels coming off that October 2020 breakout as well to the $69,000 all-time high. Anyways, moving on now. I did want to now get into something that we spoke about briefly last week, but I want to bring it back. Because I do think that it can give us a bit of insight as to the timing and what to expect maybe over this next, year-long period, let's say. So what we're going to be looking at here is we're going to be looking at these green vertical bars. All of them represent the prior halving dates, and then this one would be the expected one in the future, which is about a year away from now, in May of 2024. Somewhere around like May 20th is where it's presumed to be. But these things do move around a little bit, but you get the idea. Anyways, the prior ones in the past, which is fucking redundant, but more importantly, there has been a very interesting relationship between the halving date itself and about a year before the halving date. Now, I really want to break this down a few more steps, because I've seen people post this chart, and I think it's interesting on its own, but it's not the full picture. And so if we go and backtest the data, we can see, Bitcoin typically tops out about a couple years before. and then puts in this long downtrend over here, and then breaks out, as you can see, about a year before the halving. But that's not it. If we actually get into the weeds a bit more here, you can see on this first cycle, which started in 2000, or sorry, which kind of got that broke out. It broke back down out. It broke out in about 2011 or so. We can see that from there to the next actual halving, or to the halving, was about a year. So 52 bars, 52 weeks, equals 1 year. The next one happened 54 bars prior to the halving. Okay, interesting, but doesn't really mean much without context. The most recent one in 2018, 2019 broke out 58 bars in advance of the halving. So you're starting to see a relationship here. The period gets a little bit longer, but ultimately it does kind of stay a little bit more than that year-long stretch. In this case, I presumed that we're going to go like 66 bars out, or at least that's what we have seen thus far from the current actual breakout, or what would be the breakout from this long-term downtrend. That was in, I guess, early January / February, which would kind of put us at about 66 bars until that estimated date for the actual halving. So again, that might change around a little bit. So there's a little bit of a room for error here, obviously. But if you're looking at it within the context of the historical results with this, there does appear to be a nice relationship there. Now we can take this a few steps more as well, in the sense that we can measure from when the breakout happened, the price, to the next major high, and then from that actually to the next major low. And that's what I've done over here for the prior 3 cycles. Again, 3 does not make a trend, or actually 3 does make a trend, but when we're back to things, we really want a lot more iterations. But this is the best that we can do with the data that we do have. And for what it's worth, there has been some good correlations, at least I would say, but I'll let you make that decision for yourself, or that judgment call for yourself. Anyways, this first one over here, again, breakout 283, high 722. What was your average gainer, or sorry, what was the gain on that from basically, let me actually give you exactly what I'm talking about. I'm talking about from the breakout from this downtrend line right here to the next major high, which was over here, obviously. That was about 155% move. Again, I've done this for all of the prior cycles and found that the next one over here, well, how much was this one? This one was 102%. And the one after that we saw in 2018, 2019, that first move up was about 167%. So, if we take an average of this, gives us about 141% percentage gain for that first major move to the upside. Now, I'm not necessarily saying that that's exactly what's going to happen right here, but if we were to play around with numbers just to see what would about 100%, what would 100% look like on top of current price action? Low 40s, what would 150 look like? That would put you in low 50s. Again, personally speaking, I do think that's asking for a little bit too much right now. Don't want to get too greedy. But we have seen, this happen before. It's certainly not out the, it wouldn't be like just grabbing something out of fucking thin air. Anyways, the time taken until the next high on average has been about 100 days. Now, the first iteration that we did see in 2011, it was only 42 days, but the next two, very, very close to each other, actually, at 133 and 126 days taken from breakout to next major high, which I thought was interesting, which would give us about 100 days. So if you're looking at the old Balaji, I'm sorry, I'm not trying to be disrespectful, but Balaji's bet, the $1 million bet, the ball bet, then, maybe that's where he's getting his 90 days from, something like that. And if we take that from when things did break out over here, where would 90 days put you? That would put you, mid to late May. It's kind of where we'd be looking for if we do expect this rally to continue onwards and upwards, which the statistics do show. It wouldn't be out of the ordinary. Now, what you'll also notice about all of these prior rallies, again, this one over here, this one over here, this one over here, and I don't have these like exactly marked off on the chart for the high to the next low, but they all come back down for a pretty nasty move to the downside. I would even argue that they were effectively retests. For example, in this particular one, from 2012, you get your high right here, and then you get your retest, if you will, down around here. It's not perfect, obviously, but this was a pretty significant move to the downside, like 44%, right? Anyways, again, I've done this for all of the prior cycles, and what did we find? We found that, well, the percentage loss coming after that next high, again, does have does seem to have a nice relationship at about 40% or so. The highest one was 52%. That was the most recent one for March 2020 dump BOLA party, but again, still within the context of the data, I would say. And that time taken from the high to the low, average days about 90. So probably a bit, if this does hold to fruition, probably an extension of this rally currently into the 30,000s, and then, likely a retest back down. If Bitcoin even were to hit somewhere around like $40,000, if we were to play out 35 to 40% pullback crash, whatever the fuck you want to call it, that puts Bitcoin basically back at about $25,000. Again, we're getting like way ahead of ourselves, but yeah, 40% puts you back at around $25,000. So I do think that something like this is not out of the question as well. An initial busting action to the upside and then coming back down very, very hard. And then hopefully, for the Bulaw's sake, a bit of a higher low there. And for the Barrow's sake, well, that's where you might actually get your 12,000 if that area does start to really close below on higher term timeframes. Anyways, moving on now. I do want to get into what I think is probably the most relevant thing on the highest time frame, which is the weekly time frame that is happening the soonest, which is today on closure at 8 p.m. Eastern time, I do believe it is, or maybe it's 7. I don't know where we are within the daylight savings bullshit. But by the way, notice my sword in the back. If there's any mean comments on this video, it's fucking over, baby. But on the weekly over here, we spoke about this for CME. CME did not fulfill the condition necessary to close above the mean band on the Gaussian channel for the weekly. Spot price action will have a chance at the end of the day today, but seeing as CME did not do it, spot probably doesn't do it as well. But in the event that it does, what do you need to know, or what is relevant about this? Well, the mean band on the Gaussian channel on the weekly time frame has had a nice relationship with rejecting price action pretty nastily. As the Gaussian channel turns red and as Bitcoin has been away from it for a long time. So let me give you an example. Maybe this one over here would be best done. You can see that Bitcoin, the Gaussian channel turns red. Bitcoin gets kicked out at below it. Boom, regains it over here. Tests the median band, or sorry, the mean band right here. Once it busts on through, gets a free ride to the top side. That was 2019. Same thing over here. Once it busts on through, gets a free ride to the top side. And this side, in this case, it like literally just blew its top after that. And same thing over here as well. It grinds up against the mean band for quite some time. Boom, busts on through, and there's a free ride to the top side. So in this case, Bitcoin has been living away from this thing ever since April of last year, actually, again, about a year ago. And if it were to close above about 28, I'd really want to see it close like above 28,500 to get excited about it. But at that point, a free ride to the top side of the band, certainly not out of the question as well. And that would be somewhere around like 32 to 33,000 bucks. So, does it happen this week? Does it happen this week? Does it happen next week? I don't know, but it will have a chance. But here's also the thing. That does imply that if you are bearish on Bitcoin, or if you want to be bearish on Bitcoin, this is kind of like the next level, the next big thing, the next source of hopium for a major rejection. This is where you would expect essentially a rejection. It's even the top side of the monthly, I believe, as well. Yeah, it's the top side of the monthly right here, but this one a little bit less interesting just, for lack of data on the monthly. But other than that, I want to keep this video a little bit more on the short side. I guess we can go back over the 12-hour time frame setup here. Just kind of leave this one off. So we will talk about like somewhat lower time frames, but ultimately, what do we see? Well, we saw another one of these setups where basically it's an HPDR setup where we have the 6-hour time frame closing below the blue 50% of historical returns range lows. So the range lows right here. That coupled with declining volatility represented by the BBWP indicator right here does initiate a setup for a higher probability of a bounce. If we have our script back tested here, then we can see it does give about a 68.35% probability for a nice bounce to the upside. Obviously, it's like bounce to the upside. Yes, we have bullish dumping as well, but you get my point. And this one, while it did actually play out a nice move to the upside pretty soon after that, a few things of interest right now, because one, it did play out like about a 6% move to the upside, which we do expect about a 5 to 7% move based upon this. But here's the thing, that happened within 1, 2, 3, 4 bars. Why am I bringing that up? Well, we do expect on this particular setup to take about 18 bars, which would actually put us at tomorrow, Monday, throughout the day. And on top of that, we did not get the official take profit conditions over here. So in the way that the data was tested, This setup is currently open still. And yes, it retested down around here. That's fine. What would invalidate this thing? Back below about 26.5 on a closing basis, that would invalidate it, obviously. And then we can probably look for like a 4% move, 5% move to the downside. But for right now, it would still suggest that Bitcoin probably gets one more try to the upside. And then the question is, where do things land? If we can show very briefly the daily ranges here, let me see if they pop up. Yeah, we can still see that the daily range is coming in between about 25.7 to the downside now versus about $30,000 to the upside. That's what this one's saying. So this would suggest as well, below 25,500 or so on a higher term time frame closing basis. That's where you're going to start to see me get quite bearish. I know I was saying 26,500 before, but I do have to move it, seeing as this has actually moved now. But basically $26,000. You start to see higher term timeframes close below there, probably going to be problem city. Anyways, I think that's a good place for me to be leaving off on this particular video. As usual, the Bybit shill. Yes, the Bybit shill is still live, meaning that if you're looking to get the Jewel Light for free for a month, then you can follow the directions in the link in the description below. What else? We're also going to be sundowning the Jewel Light, the premium features over here in favor of just, an individual service, and the price will actually be rising. So if you do get in beforehand, like now, until like maybe like early April, you can be grandfathered into the current price. Nothing's going to change for you if you have current premium features. We're not going to change the price on you. Obviously, that's unethical. No shit. But we will be changing it after that date. So if you do get in before, you get to keep that for as long as you're subscribed. And if you do get in after, well, then obviously you get the new one. Anyways, what else? Yes, and also, now that we're back in Finland, I am considering moving back the times for these videos, maybe a little bit more around American morning. So I'm curious to see what the community would think about that. Maybe I'll put up a poll on YouTube as well, just to see, what the results are. And yeah. We'll see what happens. Anyways, yes, okay. With all of that said, I want to wish you the best as always. Take care, much love, and see you hopefully soon.